is with the greatest pleasure that we welcome you to today's episode of Tax Matters. My name is Olumuyiwa Matuluko. We are now in the month of August, the 8th month of the year 2017. Tick-tock, tick-tock. The year 2017 is gradually packing its bags. We wish you well and we wish ourselves well. VATS, Voluntary Assets and Income Declaration Scheme, is still trending. Of course, you know that VATS was launched on Thursday, June 29 at Aso Villa by the acting president, Professor Yemi Osinbajo. And what is VATS about? It is the provision of a window of 9 months for non-taxpayers or those who have been paying and have not been paying adequately to come out clean, to come forward, declare their true global income and pay appropriate taxes. You have between July 1st and March 31st, 2018 to do that. And 1 month is gone already, so there are 8 months left. The main story on today's episode of Tax Matters is on a matter that is closely related to VATS. And you'll find out why we say that presently. The workshop was held in Lagos on the very day that VATS was being launched in Abuja, talking about Thursday, June 29, 2017. And of course, it went into the following day, Friday, June 30. Organized by the Global Forum of the Organization for Economic Cooperation and Development, OECD, and hosted by the Federal Inland Revenue Service, the two-day workshop was tagged Foundation Course on Automatic Exchange of Information. Now, exchange of information, EOI for short, is very germane to the whole matter of full disclosure of assets and income by persons and corporate bodies, and the efforts of taxing authorities to bring them to tax. And that is the connection between EOI that we are treating today and the Voluntary Assets and Income Declaration Scheme. You see, under VATS, you have the opportunity in Nigeria to declare your true worth and subject yourself to due taxes between July 1st, 2017 and March 31, 2018. 1 month is gone already. You have 8 months left. After the deadline, March 31st, 2018, the tax authorities in Nigeria will have every reason to come down hard on recalcitrant taxpayers to bring the full weight of the law to bear on these recalcitrant taxpayers. And that will be based on information available to the taxing authorities. Now, there are several avenues open to tax authorities to get information about the worth of persons and corporate bodies. One of them is exchange of information. And as you presently find out as the program progresses, 101 countries under the auspices of the OECD have signed up to automatically exchange information about assets, about incomes that individuals and corporate bodies own in their various countries. Talk about Big Brother. Bye-bye to tax haven. Bye-bye to tax dodging. The peacock has no hiding place. What is exchange of information, EOI? Mr. Femi Edgar is of the Federal Inland Revenue Service and a resource person on EOI.
It's a good thing that we're having this training in Nigeria. As you're aware that Nigeria's tax system, we'll call it, we do a worldwide global tax system, where residents of Nigeria are supposed to declare the worldwide income. And as you know that EOI lifts the veil, so information lifts the veil. That's what we know it does. It just gives the tax man information on what the taxpayer is hiding. And truly, it's a very traditional thing for taxpayers not to disclose income that's coming from offshore in Nigeria. And we expect that EOI will help us to lift the veil and see what's happening, what kind of income they're getting from outside the country in terms of rental income, interest, royalty, dividends. Because truly, Nigerian tax residents have, Nigerians are very enterprising people and they have assets all over the world. But the taxman is a lot of times in the dark. So we expect that this training will put us as tax people in a position to use this tool to lift the veil and get information that we need for tax purposes.
That information is central to the administration of any tax system, and that's absolutely right. Without this, you're in big trouble in terms of enforcing your own laws. The point about this is that every single one of these places has signed up to the Common Reporting Standard, except the US, and the US is doing FATCA, which in some cases is reciprocal, and in other cases is non-reciprocal. So what's going to happen this year on the 1st of September when automatic exchange of information starts, these jurisdictions and countries are going to start pumping out huge volumes of information on residents of these countries that have accounts in these places. And the important point about these places is that everybody that matters is here. So all of these countries have signed up to do automatic exchange of information.
You know, as a taxman, when you're summoned to your Ministry of Finance for an emergency meeting, it's going to be a bad day. And it was FATCA they were talking about. You know, FATCA is an American law, and of course it doesn't have any purchase in another jurisdiction. But the withholding tax on what's on the dollar as a world reserve currency, your financial industry can't avoid it. So the financial industry in the UK was very keen to comply with FATCA, but the UK law wouldn't allow them to comply. Our law said you have to keep information about your banking customers secret. You can exchange it with tax authorities through the treaty system that HMRC has, but a bank can't just unilaterally do that. And so we had to enter into a discussion with the Americans about how we would put a legal framework in place to allow our banks to comply with FATCA. As we started doing that, it became clear that we weren't the only ones having that problem. The French, the Germans, the Spanish, the Italians, we were all working at the same time. And we all started to notice the same thing at the same time. Our banks, our financial industry, was having to spend a lot of money on IT systems and so on to comply with FATCA. And there was no benefit to us from that. It was all for the Americans' benefit. In the UK, it was even worse because the Queen is the head of state for the Crown dependencies and the overseas territories. They wanted to send the information to America and would need the Queen to sign the international agreement to do that or give permission for it. So we would be in the very embarrassing situation of Cayman or Bermuda sending more information to the American government than they were sending to the UK government, which would be completely politically unacceptable. So it became obvious we needed to do something and build more of an international system. And as we did that, industry said, well, look, what we're really worried about is that we're going to have so many different standards in so many different countries. If you're having an international system, you need an international body to design the rules and make sure they're fair. And that's where we turn to the OECD, with a mandate from the G20 to come up with a system. And to be fair to the G20, they said this has to be an international one. It's not just one for the rich countries with financial centers to share this information with each other. It has to be something accessible to everybody.
As you can see, legal barriers are being dismantled. And this scary one.
We observed similar developments in respect of voluntary disclosures. We have no special regimes for the different leagues. We have a very general voluntary disclosure rules, but interesting maybe for you that our constitutional court said the penalties have to be more strict. And one example is that when a taxpayer evades or avoids more than 1 million, the Constitutional Court said it's mandatory that this guy has a jail sentence, in addition to the interest and the payment and the penalty. So that was a decision by our court. And maybe the football fans know Uli Hoeneß from Bayern Munich. He went to jail for, I think, 15 months. Because he had evaded taxes.
I think that's a really important principle. You shouldn't be better off when you try to evade it. Even on a voluntary disclosure, you should always be paying a penalty because after all, you have tried to cheat. And even in the very early days of this, when it was a leak of information, it probably wasn't a comprehensive leak, we hadn't got everyone, and the legality of it even was in question. Even then, even the most generous disclosure facility that we had, you had to pay a penalty. You have to be worse off for doing it.
London, New York or Lagos, business or holiday, home or office. You can now carry out your tax transactions from anywhere in the world. You can now file all your tax returns, pay online, get a receipt and even process your tax clearance certificate from anywhere in the world online and in real time. All you need to do is log on to www.firs.gov.ng and click on e-services and be introduced to the world of innovation, convenience and transparency from the FIRS. You can also pay stamp duty as you register a new company with the CAC or for other transactions that require stamp duty payment online. You can also file your withholding tax returns and determine the withholding tax deducted from you is in government coffers so that you can get your receipt within 45 days as long as the deduction has been remitted. Yes, all of this and more online at www.firs.gov.ng/e-services. FIRS, making tax administration as easy as ABC. Please note that all FIRS services are free of charge. This message is from the Federal Inland Revenue Service. It pays to pay your tax.
Welcome once again. The program is Tax Matters, and on this episode, we are telling you the story of the two-day workshop held in Lagos in June on automatic exchange of information. On day 2, in his usual hands-on manner, Chief Host and Executive Chairman, Federal Inland Revenue Service, Mr. Babatunde Fala, was with the participants.
For Africa, it is clear that we need to help each other. And the only way we can help each other is through this automatic exchange of information. I'll give you some data from Nigeria and let you also understand what we have done. When we look at our sources of revenue, the sale of natural assets, be it oil, be it iron or whatever, diamonds, we have it all. But at the end of the day, it's not sufficient enough to fund our respective governments. Now, some countries have different tax systems, but at the end of the day, each African country who is here present needs to maximize its revenue through taxation. And the only way of doing that is when we exchange information. I was at a talk sometime, I think, earlier this year, and we're talking about illicit funds flow. And surprisingly, when I got involved in these discussions, we found out that the commercial aspect or commercial percentage is actually higher than the corruption standards that we talk about. A lot of people talk about African leaders taking money out of their respective countries and investing it not only in Europe, but now in other African countries. And those host countries don't ask for information in terms of the source, in terms of the tax payments of these individuals or these corporate organizations, which also poses another danger to the stability of the host country and also the type of investments that may be accepted.
On the numerous implications of illicit funds flow,
I'll give you 2 examples. There's this gentleman who was notorious in terms of kidnapping. But what he did do with some of the proceeds of this criminal activity was that records from our information. He's not even a taxpayer here, but he took funds from people through kidnapping high net worth individuals and took those funds abroad, received funds in South Africa, received funds in Ghana, and bought choice properties. So you're looking at 2 aspects. One is the issue of security, the other issue of lost revenue. So, I mean, basically, he did not pay tax in Nigeria. Certainly, he did not pay tax in Ghana. He did not pay tax either in South Africa. Another issue that was on the internet, I think about 2 or 3 weeks ago, was one of the most expensive penthouse apartments in New York had been foreclosed. And it was bought by a gentleman who is Nigerian, who is involved in certain oil scams or deals within Nigeria for $500 million. Now, the issue is that some countries may say, ask no questions. But the United States of America, that allow that individual to buy a $500 million apartment without asking a question, also has a scheme going on now that for all Americans that have got investments or bank accounts outside America, they gave those respective host countries and the banks a certain time limit to provide that information to them, even without any international legal agreement. So if the developed countries could be watching their bottom line, I call it their bottom line in terms of tax revenue, it's time that we do the same. I'd really like to appreciate this team and OECD for their effort and for their interest. Because if one looks at what they're doing, if they took it on a case of country by country or continent by continent, they don't really owe us any obligation. But out of morality, out of fairness, they have decided to share certain experiences and information with us to improve our own financial revenue base. And in doing that, to fund our respective governments.
Mr. Fowler also informed his guests about Nigeria's efforts at domestic exchange of information.
Now, what have we done in Nigeria? In Nigeria, we have a three-tier government under a federation, meaning that we have the federal government, the state government, and the local government, and they each have separate budgets. And by the constitution, they equally have the constitutional rights to raise tax revenue. So we have in Nigeria 36 states with 36 boards of internal revenue, and then the federal inland revenue, who sits on top of what we call the joint tax board as chairman. And we looked at it and we said that, listen, if we're going to have an effective tax administration in Nigeria, it can't be successful at the federal level only and not at the state level. So we signed an MOU, basically automatic exchange of information, and we got the list of all taxpayers within the states, and we also gave them the list of all taxpayers at the federal level, and we exchanged information. And within a matter of 3 months, we were able to grow our own tax base by close to 400,000. And some states also grew their own tax base in the thousands also of companies that were within their states but were not registered for tax. And likewise, companies that were operating in some states that were not registered at the federal government level. We also have a handshake with the Nigerian Customs in terms of VAT, value-added tax. And in the last 18 months, I think we've been able to get an additional 118 billion naira in terms of VAT. So you're looking at it both from an internal, within your country, and outside your country type of arrangement. And the honest truth is that some politicians, in quotes, or some parties who have these investments outside your country may not really be interested in this automatic exchange. But at the end of the day, it is to the benefit of each host country. And I think we actually have to start it within Africa. And that's why I gave those examples. I was in a meeting in South Africa as the chairman of ATA, and I did find out information that Nigerians or Nigerian organizations have about 29 private jets registered in South Africa. Now the issue is that how much tax do they pay here? We're not even talking about the issue of how they got the money to buy the jets, but first of all, even in terms of revenue, how much tax have they paid to the federal government of Nigeria? The issue as to their source will be dealt with later on. And I think the more we work together through this automatic exchange of information, the better it is for all of us.
Tax Matters spoke to a team of facilitators and participants at the workshop.
What's the idea behind this program?
Well, the program is organized to build capacity on automatic exchange of information. You know, the world is now moving to promoting transparency in tax administration, and countries through the OECD, ATAF, and all these bodies are working together to ensure that taxpayers, disclose their income generated from anywhere voluntarily. And that, if this is not done, there is avenues, that is available to tax authorities to get this information. This training is about how to use and analyze the information that exchange of information will provide. So the information will be bulk information, so to say. And the tax officers are supposed to be trained on how to use the information, how to even generate the information, and all things like that, to at least make their work to be more effective, and the tax officers to be as efficient as possible.
So who is organizing this program?
Well, this program is being organized by the OECD, the Global Forum of the OECD, in collaboration with Federal Inland Revenue Service and ATAF and WATAF.
The idea is to build awareness of automatic exchange of information, which we at the Global Forum think is the future of international cooperation. Beginning this year in 2017, 50 countries are going to start exchanging information, financial account information held by their financial institutions on residents of other countries. Next year, another 50 countries will join them, making 100 countries around the world, which will be pushing out information from their financial institutions to their treaty partners, to help their treaty partners enforce their own tax laws, and to make sure that residents of those countries aren't hiding money on which tax has been evaded in their financial institutions. And all of the major financial centers in the world are part of this. What we're talking about here is automatic exchange of information, and it's automatic exchange of financial account information. So what it means is that every year countries that participate in this program will send out automatically information on accounts which are held in their countries by residents of your country and of all of the other countries that are participating in the work on automatic exchange of information, or that have agreed to implement the what we call the Common Reporting Standard. So beginning this year, in 2017, you will see all of the major financial centers in the world pushing out information on accounts that residents in other countries have, to allow those countries to ensure that their taxpayers are not using accounts in those countries to evade tax in their own countries.
What is the idea behind this program?
Yeah, the idea behind this program is to help facilitate the exchange of information needed for tax purposes. Previously, what was in vogue was the exchange of information on request, but now the current push is for automatic exchange of information. That means jurisdictions will be able to receive information from other jurisdictions, not only on request, but spontaneously. And you will agree with me that effective tax administration thrives on information and the availability of the information as and when required. So this new push is to bring people from West Africa and beyond to talk about the automatic exchange of information, so that the various jurisdictions can sign on to the necessary administrative instruments that will facilitate that.
Who are those that you are training today?
Yeah, majorly the officers in charge of exchange of information units in their respective tax administrations, and then the counterparts from the Ministry of Finance, who are meant to be in charge of tax policy issues. The goal is to, if you get information of a national who is hiding his proceed of his business in another place because he wants to hide it and not pay. Now that you have a new move that someone can automatically forward those information, it makes your job better. It means you can collect more taxes. It means our various countries will have opportunity of access to the money needed for development. So I see a fantastic opportunity ahead of us.
Be warned, there's no more hiding place. Big Brother is watching you. So what's our advice? Visit the VASE website today, or better still, visit the nearest office of the Federal Inland Revenue Service or a state board of internal revenue. It is a collective effort between federal and state taxing authorities. Collect a form, fill out your details, come out clean, and you'll be the better for it. Let's meet again on this forum next week, same day of the week, same time of the day. Have a blessed week ahead and enjoy the month of August.